Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about General Dynamics CORP quarterly report. The businesses and services provided by General Dynamics Corporation include aerospace, business jets production and sales, aircraft maintenance and repair, management, charter, staffing, and fixed-base operator services, marine systems. Design and build of nuclear-powered submarines, surface combatants, auxiliary ships, and commercial vessels, ship maintenance, modernization, and life cycle support services, combat systems. Land combat solutions, such as wheeled and tracked combat vehicles, main battle tanks, armored vehicles, and munitions technologies. Information technology solutions and mission support services, mobile communication systems, cloud services, cybersecurity, network modernization, artificial intelligence, machine learning, application development, high-performance computing, and 5G wireless communication services. Additionally, the company provides unmanned undersea vehicle manufacturing and assembly services. The significant upward movement of General Dynamics Corporation, GD, stock over the past year can be attributed to several key news events. The company's strong third quarter 2025 financial results, which included diluted earnings per share of $3.88 on revenue of $12.91 billion, beating Wall Street estimates and boosting its 2025 EPS guidance to $15.30-$16.35. Additionally, the company secured major U.S. Navy submarine contracts worth billions of dollars, further contributing to its stock price increase. The strong performance in its aerospace segment, driven by business jet deliveries, including the FAA certification of the Gulfstream G700 in March 2024, also played a significant role. Furthermore, analyst upgrades and significant IT contracts with the U.S. Army have added to the company's growth momentum. These developments across its various segments have collectively fueled General Dynamics' stock price increase over the past year, resulting in a 28.26% year-to-date return. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the aerospace segment, which saw a significant increase of 35% in revenue. The marine systems segment also experienced double-digit percentage growth. Additionally, the sale of business jet aircraft and new aircraft orders contributed to revenue growth. In contrast, revenue decline was mainly attributed to the decline in non-U.S. commercial revenue, as well as program timing and ramp-down of legacy programs. Net income and profit margins. A mixed picture. The financial summary reveals a mixed picture for net income and profit margins. On one hand, net income increased by 13% from $930 million to $1,059 million in some periods. However, it also decreased by $3,135 from $24,434 million to $21,299 million in another period. Profit margins showed improvement in operating margin, increasing by 0.1% from 10.2% to 10.3%. Net profit margin also increased by 0.2% from 8% to 8.2%. However, the overall trend was marred by a decrease due to an increase in operating costs and expenses. The fluctuations in net income and profit margins can be attributed to various factors, including changes in operating costs and expenses. Despite some periods of improvement, the overall picture remains mixed, indicating that the company still faces challenges in maintaining consistent financial performance. The company is indeed generating positive operating cash flow. This is evident from the financial summary, which confirms that net cash provided by operating activities has been increasing over time. Specifically, in 2025, the company generated $3,559 million in net cash from operating activities, a significant increase from $1,952 million in 2024. The company's debt level has undergone significant changes over the past period. Short-term debt decreased from $1,502 million to $1,003 million, while long-term debt also saw a decrease from $7,260 million to $6,957 million. However, the issuance of new fixed-rate notes worth $750 million in August 2035 may indicate an increase in long-term debt in the future. In terms of interest expenses, there was a slight increase from $248 to $251 in the first 9 months of 2025, with expectations of further growth to approximately $330 in 2025. Overall, while short-term and long-term debt levels have decreased, interest expenses are expected to rise due to increased borrowing costs. Management is optimistic about the company's outlook, expecting significant revenue growth across various segments. By year-end 2026 and 2028, they anticipate recognizing a substantial portion of remaining performance obligations, backlog. The aerospace segment is expected to reach $13.2 billion in revenue, with a 13.3% operating margin in 2025. Strong demand for new aircraft orders has led to a book-to-bill ratio of 1.3:1, indicating robust sales growth. Management plans to prioritize cash flow generation through cost control and working capital management while investing in products and services to drive long-term growth. They also aim to pay a predictable dividend, make strategic acquisitions, and repurchase shares opportunistically. Overall, the company is positioned for significant revenue growth and increased profitability in the coming years. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, with notable figures including $188 million and $403 million. Additionally, the company has also engaged in share repurchases, purchasing 3 shares on one occasion and 600 shares on another. Concerns about inventory buildup or supply chain disruption are evident in the company's financial summary. The book-to-bill ratio of 1.6:1 indicates a potential issue with inventory buildup due to an imbalance between orders received and production capacity. Furthermore, differences in anticipated and actual program performance, including cost overruns and supplier issues, suggest that the company may struggle to meet demand efficiently. These challenges are compounded by supply chain difficulties mentioned on page 36, highlighting the need for the company to address these concerns to maintain a stable and efficient operation. That concludes the financial summary for General Dynamics CORP. Feel free to comment below, and I will be happy to answer them when possible.